Okay. Good morning, everyone. We're going to try to keep to our schedule, so we'll get started. Welcome to Structure Invest. This is a online webinar dedicated to real estate and finance professionals. It is a offshoot of the infrastructure summit that we hold in Toronto every year. And of course, as you well know, this did not happen this year in the pandemic environment, and so we've moved online. Structure Invest actually was a live event last year in New York City. Our plan going forward is to continue that whenever the world allows us to do that. Your hosts today, myself, Jabez Tan, Head of Research, Ainsley Woods, Senior Analyst, and Candice Rodriguez, who handles the commercial side of our business, Director of Business Development. I think many of you have met us, but if you haven't, we would certainly like to follow up with you and get to know you better. So thanks again for joining us wherever you are in the world. Good morning. And I know some of you are calling in from other parts of the world, so good afternoon and good evening, and hope this is a nice nightcap for you. As you know, we're a distributed team. We are spread across the United States, Canada, the UK, and we have a satellite office in APAC in Singapore, where we do a lot of our research in that region, which you will see snapshots today from Jabez as he follows my presentation. Just to give you a quick sense, I think many of you know what we do and what we're about. This seminar is geared specifically, as I mentioned, to finance and real estate professionals. It's oriented towards operating executives from that perspective, and from the investors' take on that. We are very global in our scope, so we're going to try to give you a global perspective on what's going on in the hyperscale value chain and in infrastructure services. And before I begin, just want to give you a quick update on some of the research we've done this year. I know, just given the unique circumstances of the year, we haven't all been in touch on a regular basis. We continue to do our deep dive analysis of data center and hyperscale markets around the world. You can see Paris, Toronto, where I'm broadcasting from right now. We finished those reports just very recently. And in the next quarter, towards the end of the year, we'll be releasing a few more studies. We also will be publishing some updates as well on the managed hosting private cloud space and a market share update at the end of the year. It's just a quick, so I'm going to go over some of the updated market share data that we completed during this year to account for, as I think you'll be happy to know that we will be accounting for what's happened in this pandemic environment, and having taken a look at a couple quarters of results. We're still in the middle of that second quarter post kind of fully exposed to the pandemic, the numbers coming out. So that those developments will reflect in our commentary, run over a few themes, and hopefully be 10-15 minutes for M&A. So this is our updated snapshot of the managed infrastructure space, and the managed infrastructure space encompasses those 7 categories you see running along the bottom. Apologies if it's a little small and a strain on the eyes. We see these 7 categories. So this group of segments does not include hyperscale cloud and data center co-location. We'll get to those quickly. But as a group, these segments we are projecting are growing on a 5-year CAGR of about 12%. As you can see along the right, those different buckets are growing at different rates according to our projections. The largest group, the complex managed hosting, which encompasses bare metal as well as private cloud infrastructure, is the largest segment, growing right at about 10%. And you'll notice at the top, one of the smaller segments, but we feel the fast emerging and fastest growing right now, which is managed cloud or managed public cloud or managed third-party cloud. So managed AWS services, managed Azure services, managed Google services. Hyperscale cloud, as you can see here, is growing at a significantly higher rate. Our current 5-year CAGR is a bit dialed down from the last 2 years, as you may notice, to account for the increasing scale of that business, as well as the slight impacts, which we'll get into from the pandemic environment. But we feel comfortable that this segment, which encompasses 9, primarily 3 major hyperscale platforms, but our definition expands out to 9 hyperscale platforms. That includes 4 from the APAC region. And so we feel comfortable that it's tracking towards getting closer. I think early next year, you will see this be a $100 billion run rate sector. Co-location is the last bucket in the infrastructure services sector from a market share perspective. We feel this sector is right at around double-digit 5-year CAGR. As you'll see from the different hues of the green, sorry to throw so much green at you, the wholesale segment growing significantly faster than the retail is driving a lot of this growth. Guys is going to drill into this a bit more detail in the next hour, and he'll also take a look at the interconnection component. But the big takeaway here is wholesale growth driven to a large extent by what's happening in hyperscale cloud with its impact across the value chain. So if you take those 3 buckets, you put them all together, we've come up with a total off-premise or outsourced third-party infrastructure services projection. And as you can see towards the left in 2020, inching up, we feel at the end of this year to 200 billion. You average out all those CAGRs. This is what we feel the entire market is growing at on a 5-year basis, roughly 24-25% year over year. And you can see the trajectory continuing to move upwards towards the right. So taking those numbers and splitting them out on a percentage basis to give you a sense of kind of what the market is comprised of today and what it will look like 4 or 5 years down the road. I think it's pretty clear where what kind of trajectory the sectors. Hyperscale cloud. I think maybe just a couple of years ago that slice of the pie might have been only around a quarter, but as you see, it's inching up to half of this pie. And it's going to surpass that, well surpass that halfway mark by 2025. If you'll notice, just on this percentage basis, you'll see that because of that, the other segments within the space are going to decrease on a percentage basis. But if you look just under the percentages, you'll see the total aggregate sums of values of those markets, and you'll see that those are still going up. So it's growth, but the kind of the mix within infrastructure services is going to change, and I think we can all agree what direction that change is moving in. So this is just a view again on the growth trajectories on a percentage basis. So trying to take into account. So this is, I think many of you on the call are very much invested and have a stake in what's going on in outsourced infrastructure services or off-premise with third-party infrastructure services. A lot of the growth is obviously coming from new workloads, organizations, content, applications that are built on the cloud that go from concept to the cloud. But also a good chunk of the growth for the sector comes from the traditional world, the on-premise world. So what we've tried to do here is place a value on that. We would argue a relatively conservative value that's infrastructure centric. So it would be very much tied to the infrastructure component, not necessarily the services that may be purchased or consumed to manage or augment or add value to that on-premise infrastructure. So if you put the on-premise with the off-premise, you get a total market value, which is the chart to the right of your screen. And if you look to the left of that chart, 2020, we feel it's about $500 billion or 518 billion value today, moving up towards that $1 trillion in value at some point in the future that often people talk about. Probably not unrealistic. The IT services market as a whole is probably likely to, on a global basis, surpass that $1 trillion mark this decade at some point. So, and again, on a total value basis, combining on the on-premise world with outsourced infrastructure services. And as a percentage basis, you'll see, according to our model and what we think is going to happen, you can see the top hue, the top bar around 62%, the on-premise / traditional world trending downwards, and of course, outsourced infrastructure being increasingly the default model and the default way computing infrastructure is run in the world. And so that, if you account for that additional piece, the on-premise piece, you add an extra slice to that pie I just referred to a few slides ago, you'll see If you'll take the outsourced in the darkest hues of the red on the left, still being on the minority piece of that, the smaller piece of that, I'd say. But you'll see by 2025, if what we're projecting takes hold, and we're pretty confident that this is where things are going, you'll see a pretty dramatic shift in that half, the computing world could be on some public cloud platform, and maybe inching towards maybe just a quarter of the world still sitting in some kind of traditional infrastructure environment. That world tends to be trending downwards, and the outsourcing driven by all the net new stuff that's being built is driving the growth, and that will shape the entire IT services infrastructure world. So that's just a quick update on our on market share numbers. I'm gonna do a quick time check. I think the big elephant in the room is obviously what's going on this year. That's changed a lot of our lives and changed how we communicate. The pandemic certainly caused a lot of changes for the infrastructure services market. We feel, our sense is that there's been a bit of both, right? There's been headwinds and tailwinds. And I think here are some of the highlights of what we've seen take place. I don't think it's much of a secret to many of you, just because you've also been heavily involved in the sector and living some of these experiences. But I think the main takeaway here, is towards the bottom, is the nature of growth that's happened. We've had a few, over half a year to look at the impact, and we feel that the sector continues to grow. We feel a lot of the a lot of the negative impact from certain parts of the economy are offset by some of the tailwinds that the outsourced infrastructure model is able to take advantage of in almost a counter-cyclical way. So we feel that what's happened this year is really a validation of the model. I think the foundation of the sector is extremely strong, and this chart here kind of try to explain what we think is driving that, and very much the installed base of service provider growth, whether you're a single market MSP or a single facility data center operator, or a larger national or global platform. Existing customer growth has been what's kept this sector solid throughout all the headwinds that the larger economy has created. So you're seeing, from two levels. One, an operator's existing customer base is an increasingly important component of its growth. 80%. This is just kind of the 80-20 business rule. You guys might have that you maybe learned in business school. In some cases, this is where we think the trend line. I'm sorry, not in some cases, but this is where we think the trend line is going. Now on the right, now that's from a customer base perspective. On the right, we're kind of looking at it from the single customer's consumption behavior. So the core infrastructure, to be very obviously, is very installed. It's contracted, it's stable and predictable. But increasingly, given what's going on out there, organizations are kicking off initiatives or have requirements based on the changes in their business and the changes in the environment that are driving more value-add growth. So core infrastructure, which is the bread and butter of infrastructure service providers, is starting to trend downwards a bit, whereas the value-add, the service component, the consulting component, the features, the add-ons, and those services are an increasing percentage of that spread. But it's a little flipped over. Core infrastructure, maybe again apply the 80-20 rule. So just want to move into kind of what's going on for many of you on the investment side of the game, on the lending side. No secrets to you; these names are but are very familiar to you, and just kind of just wanted to summarize just some of the bets that are going on, just how big this market is getting, how that momentum has not stalled in this environment. And a lot of the bets that you see here on this chart have been made very recently, or in the already been in the last 18 to 24 months, and very much speaks to what's going on in the marketplace. Further validation of that, we've seen some entries from both the data center side and the MSP managed hosting and CDN edge side to the markets on a global basis. Local web hosting company in South America. The rumor mill could see is saying that we could see some more entrants in the next year. That opportunity, obviously companies growing, taking advantage, betting on new markets, and that's led to new platforms being established in markets around the world. This is a quick snapshot of many of them that are going after, a lot of them obviously going after this significant hyperscale driven opportunity to as well as you see towards the bottom left, in certain parts of the world, we're starting to see edge bets on edge markets or edge data centers. And so you see a small, relatively small group of companies go after this opportunity and do it on a global basis. I think that this is not an exclusive group. There are certainly other companies that straddle multiple regions and are probably going to move into this category, or are straddling two significant footprints in two major regions around the world, like say a global switch or a cold DCS with significant footprints across Europe as well as APAC. And that is no surprise, I think, to many of you, that's driven and you've been heavily involved in some of the M&A activity that has been geographically driven, motivated. Some big bets to highlight, what Digital Realty has done to move forward in Europe. Equinix coming here in a more significant way in Canada. And Vantage doing making some moves out in Europe, and that's where we see in the last 12 months, and we think in the next 12 to 24 months. Just as a comment on the global nature of this business, many of us, we've spent a lot of time in the APAC region following that growth surge, and right now we're seeing hyperscale consumption really kick up to another level in Europe, not just in the major flat markets that we are very familiar with, but in that second tier, we are starting to see hyperscale cloud moves out into these markets. We're seeing that ecosystem flourish around it. So this is, hyperscale is very much a primary driver of what's going on, but want to emphasize that it has a impact across the ecosystem. So when markets, when hyperscale cloud lands in a market, obviously the data center, the hyperscale data center opportunity follows it, but as well as there's a spin-off effect into the MSP and managed services space as organizations need help designing, planning, optimizing, and managing what they're doing on this cloud infrastructure, whether they run on it exclusively, if they've made an all-in bet, or whether, and probably more likely, whether they're running that in some type of hybrid infrastructure, distributed in some kind of distributed fashion across what they have with other cloud providers, or what they're handling on premise in a traditional environment. Touch a bit on interconnection, do a quick time check again. And I believe Jabez is going to touch a bit on this, but as we talk a lot about the global cloud build out driven by hyperscale platforms. At the same time, interconnection connections to those clouds are also kind of following a similar pattern. Obviously, going to the same primary connectivity points, the major markets, where the network density and the connection density is. So you're seeing this follow very closely, and it's shaping what's going on out there. So, I think organizations, if they are moving to the cloud or they're integrating and creating hybrid environments around it, they need some sort of connectivity. They need access to an interconnection fabric that gets them where they want to go, and that's driving the data center market, as well as the data center market that supports hyperscale clouds. And so this is just what we're starting to see in certain markets around the world that I find quite intriguing, that certain locations we will start to see. I think we're very familiar with the large campus scale builds, campus style builds to support large hyperscale farms that tend to sit in suburban areas. We're also starting to see smaller increments that are strategically placed next to data centers with densities of networks and on cloud on-ramp interconnection fabric, and all of this is happening on a single campus. So as these, this starts to develop, we're starting to see certain markets around the world. This is a snapshot that spans, hopefully gives you a global perspective, where a certain type of, kind of like a hub and spoke model starts to emerge, where a primary hyperscale market, say a Paris, say a Sydney, develops and scales, and then you'll start to see based around that a spoke market or a secondary market that is strategically tied to a connectivity point. In often cases, as in the case of, say, Arsène Marseille, a subsea landing station. And that drives a connectivity, and these two markets almost start to work as one, driven by the need to move workloads to drive connectivity within that national market as well as out into other regions. And I think we've seen a lot of M&A and strategic activity around that proposition with various operators looking at assets that are strategically located or have a lot of network density, carrier hotels in secondary markets. All this kind of activity has really picked up steam, we feel, in the last year or so. And this is just a quick snapshot of some of that activity. Definitely not all encompassing, but includes some of the deals we've followed and feel are significant. Just do a quick time check. I want to leave time for questions. I'm going to run through just a bunch of stuff that's happened in cloud and the MSP space very quickly. I think it's interesting that some of the major cloud platforms are, it's not just a virtual, kind of a spin up a virtual machine. I think we've seen, the Oracle, for example, roll out a bare metal server option, and actually they have a capability of building a private data center that they're rolling out where they'll work with an enterprise and basically build out in an on-premise data center a miniature version of the Oracle Cloud, complete, not just the software package, but also the hardware. We've seen a verticalization in the cloud space. So I think this has happened across managed hosting and MSP, but it's also permeating the hyperscale space. So these are just some quick examples of targeted financial services, healthcare, clouds geared for those requirements. Google's doing the same thing, also rolling out a bare metal option and getting into a more verticalized offerings like a gaming server. And so and the changes have happened across the ecosystem. I think that with hyperscale scaling at the pace at which it is, we're starting to see not just more targeted and focused offerings. We're also seeing part of that process of getting there means changing and rethinking the way you operate. And so we've seen service providers in the MSP hosting space move to an asset light model. This is a quick snapshot of a few of those companies that we've seen do that, make pretty much starting to move most, if not all, and then getting out of the data center building or leasing business. And so you can see kind of the spin-off effect from what's happening around cloud, how it's changed the data center market, and how it's changing the MSP market in terms of not just how they, what kind of services they deliver, but how they operate from an infrastructure perspective. That specialization is extended to the application tier. So some of the new company formation we've seen, for example, are companies not starting a managed hosting business, a managed cloud business, but instead creating a business that's maybe focused on WordPress. Hosting is part of the technology and the expertise. It may run on a public cloud infrastructure, but the value proposition increasingly moving from infrastructure hosting or infrastructure management, but to the application tier and say, hey, this is part of a larger value proposition. WordPress is a great example. And you're also seeing organizations maybe not necessarily build entire business around an application platform, but adding expertise around an SAP, for example. A lot of service providers focusing in on that proposition, and now that not just doing that for on-premise or for a third-party data center, but now helping those organizations take that from any of those places to a public cloud environment as well. So expanding kind of the range of infrastructure scenarios they have to manage for customers. I think we're doing well on time here. We'll get to some questions. This is a quick snapshot of the SMB tier, cloud tier. So while I want to kind of balance our take on the market and hopefully articulate the fact that while hyperscale is clearly growing, is clearly becoming a dominant platform, there is still room in that market for differentiation. As I mentioned, there's a lot of gearing of service to be more focused, more targeted, whether that be around services, that be around an application platform or a vertical. And these, businesses like the ones you see here are good examples of companies that have been able to do that, have been able to carve out a place in the market, have been able to grow as this entire ecosystem continues to push forward. I think, you'll see I've got Amazon Lightsail there. I think that's a validation from my perspective of that value proposition, that they feel the need to create a service that speaks to a certain type of audience, a certain type of user, a certain subset of requirements. I think that's really important, and the fact that they've created a service that looks a little more like the other services you see on this screen, I think really says something about how the world of infrastructure services probably, while you've seen our numbers, we'll probably never get to a size-fits-all platform. And I often like to joke that, just like people drive different cars, wear different types of clothes. I think when it comes to infrastructure services, personal preferences, taste, habits will all play a part in how people choose their services. So it's important on the investor side, I think, to keep that in mind as you think about the opportunities in the space. So just to close out here, I think that another thing to keep a close eye on is how, because of hyperscale's growth and because of how it's driving what's going on across the ecosystem, I think the separation between service providers used to be, is becoming a little more muddled. Everybody is dabbling, in creating portfolios that look a little more alike. As you know, a lot of MSPs perhaps were not thinking about the cloud world 5-10 years ago, but almost all of them now have moved into some sort, whether they're reselling, whether they've made an acquisition, whether they're partnering with a public cloud and creating a managed third-party cloud service. So you're definitely seeing some blurring lines. That's driving M&A activity. I wanted to highlight some of the very large organizations that are building significant cloud practices, and they've kind of emerged as that tier of strategic buyers, almost like 10 years ago, how the telcos emerged as the primary strategic buying source for MSP hosting companies, early generation cloud companies, and data center operators. Yes, and I want to I still want to leave some time for questions, so I'm going to breeze through the part of here where we talk a little bit about the edge. I think some of you have seen this us present this slide before. This is kind of our concept of decentralization is happening at many levels, and that's how it's going to define the edge, kind of on a hyperscale level, moving into the second tier markets, and then of course at the next stage of development, intra-metro or intra-market density. So smaller increments of compute and storage infrastructure placed strategically in locations across, say a city like where I am, Toronto. These are some of the companies that we've come across that are heavily involved with this. On the data center side, on the left, service providers, which are the primary group of tenants in these edge data centers in this early build out stage. These are some of the builds that we've seen. I think the last year in this interesting environment has nonetheless not really stopped what's been going on. I think the sector has moved, I think, this year meaningfully from concept to reality, because the live deployments are now out there. These are some of the companies that organizations that are working on the various components around a wireless tower. So a tower organization with a micro data center operator, and in often cases inside the tenant inside that data center is some kind of service provider or edge or CDN provider, some kind of cloud infrastructure service that enables ultimately the type of applications, those next generation workloads we have been talking about. Tower is one kind of small increment or unit. We've seen other organizations deploy around, look for connectivity rich real estate in certain markets around fiber pathways. And we've also seen Equinix, make a play in this market with Packet, one of the early generation edge providers, from a slightly different perspective, but perhaps not from a micro data center perspective, but working within the Equinix footprint and taking advantage of their interconnection fabric to really push, how far out they can get, and they would have, with arguably buying the platform, enable various different types of compute scenarios. This is a snapshot of some of the M&A that's driving this. The towers are an interesting emerging group of strategic buyers looking at data centers in markets that might align with their footprint, but most importantly have connectivity-rich ecosystems. And I think the partnerships with all these, I think you'll notice that with the development of edge compute, there are very, as you see on the left, a lot of different components that must be pieced together. And so some interesting partnerships have emerged as this convergence develops. And I highlighted one, and I think you'll see some news from one of these names in the next week or so, where Vapor at the micro data center level, AWS, obviously the core compute, edge compute, and Vapor enabling the edge compute, of course, Crown Castle with real estate and fiber to connect and enable them, basically bring all those pieces together. I touched on Equinix and Packet already. I do think this is a very good example of what can be enabled with scale and with footprint. And I think we're going to definitely should pay close attention to what happens there. And the edge opportunity continues to be another source of new company formation. I showed you some of the companies we've been tracking on a global basis, enabling hyperscale cloud. The same thing is happening on the edge side. And so I want to leave you with a final thought. This is where I think a snapshot of where the world is today. I'm sorry about that on-premise number on the left. It's not updated. It should be 63. I think it's 63, but based on the numbers before. And this is where we're headed. I've purposely not left a time frame, but I think as you'll see, I think you'll get the sense that where we're headed, and at some point sooner than later, we'll be presenting numbers that include an edge component, and as that will be another another deployment model where we're going to see compute and storage infrastructure run. So I think, and again, this is just a further, just to emphasize where the world is going. VMware, I think not too long ago, was kind of, kicking around how they could be a cloud provider or be in the cloud space. But as you can see, they view their strategy through various different types of channels, which all head back to centers, third-party data centers, third-party service providers, and public cloud platforms. That's where they feel the compute is going, and they're trying to enable and be a part of that value chain rather than getting into direct service delivery. And I think that's a validation of where the space is going. So